Hi, Warriors. How's everyone doing during this debt ceiling drama? Let's get to the markets right away. So, Dixie, turnaround Tuesday. Pretty classic 3 drive on Dixie here. Here's their first high. Confirmed, was even diverging here. Here's your second drive. Was way under 70. And your third, didn't even get to 70. So I'm short Dixie with 50 pip stops, looking for a correction of this recent advance. In my view, this is going to be a big break to buy. This is counter trend what I'm doing right now. So look at your different fib levels. Let me see here and move me out of the way. So you have halfway back 102.16. The best thing it could do is hold at 38.2. That'd be 102.60 down around here. So between here and this moving average for a wave or a B wave back, and then a wave 3 or C to the upside from there is the way I'm looking at the dollar. Gold is up 5, silver's up 13. I feel that these are just bear market rallies for now, and not that I'm saying gold's in a bear market, because I thought we were going to get down to 1920, and we only got down to 1930, so it never quite got to this line. I think with what my take is, while the dollar's coming off, gold could rally back to this 1990, 2000 area and be bad. And silver actually, although outperforming today, looks worse. It would need 2450 to turn this market bullish again. So I think this is, again, with the dollar coming off, you get a rally that I believe will fail with the next rally up in the dollar. The S&Ps today are not acting great. And, this 4,200 level was supposed to be so important. And the debt ceiling bill should be passed in the House today. This is mainly about China weakness, and I've been talking about that with copper coming down. Hedge funds have turned bearish. They should have been listening to me about a month ago, could have saved themselves some money. I've been negative the copper for a while. Japanese yen, I think, is going to take a breather as well, with yields will be taking a breather with them. Here's your 10-year right here. We'll see. Could be a possible pullback. 360 is going to be very important. If you remember, the 360 breakout targeted 390. That was last week or the week before. And we got up to 386, close enough for government work. So it's very possible that we get pressure. I know guys looking for 3% again. That could unleash a pretty good bond rally after the breakdown. Bonds are snapping back. So I'm a bit neutral here on the yields. See what happens around 360 in the 10-year. Something I also talked about that looks like it's manifesting is in the energy complex. So where's my WTI? Here it is. Trying to come back a little bit, but I've been talking about that we could have a 3 drive here in the oil market. There's talks I read from Michael Urban Cowboy that Russia may break away from OPEC. I think it's going to look very attractive at this 62 level. And I just want to remind everyone that when you had FOMO, when the miners were exploding and you weren't there, and I said be patient, you'd be able to buy GDX at 30 again. That was just a simple measured move. 33 to 36 gave you 30. So I'm not sure this is done yet either, but due for a bounce. They're even weaker than gold. And let me show you a couple silver miner issues, especially what's been happening with this one, First Majestic. We're almost at new lows here on First Majestic, 569 last. SILJ has to dig in its heels here, or we're going to be taking out these lows. So precious metal miners need to pop here and hold here. Otherwise, I do believe with my outlook in the dollar I'm going to be able to buy these a lot cheaper. One of my favorite is Fortuna. And I think there's going to be a possibility to buy this 61.8 back to 87, maybe a 2.5 if I'm right about silver prices. So the basic takeaway is looking for the dollar to correct its recent advance. With that happening, you could get pops in gold and silver. I'd be pretty careful in S&Ps. Let me just give you at least an important line in the sand is right here at 4,100, last week's lows. Back under last week's lows, there's something wrong. So we'll see if that's because of the debt ceiling. But I look at this 4,100 now as being a bull bear line. So be careful there. As you can see, the S&Ps have been diverging for quite some time. You know, even last week, celebrating what tech was doing in a blow-off phase, S&Ps barely moved. So not impressed. Good hunting. Invite you to join us in our room and check out TradeView Markets. Good hunting. Don't forget, don't just count your